What if I told you that $1,000 invested in Bitcoin's very first year would be worth more than $80 billion today? That's not a typo, not a scam. It's real math, and by the end of this video, you'll see exactly how it happened. In 2009, Bitcoin was worthless. Literally worthless. Nobody wanted it. A handful of nerds traded it just to see if it worked. Today, that same coin has created more wealth per dollar invested than almost anything in human financial history. Stick around, because the numbers you're about to see will genuinely mess with your head. Let's go back. January 3rd, 2009. A mysterious figure named Satoshi Nakamoto mines the very first Bitcoin block. Buried inside that block was a headline from the Times of London about banks being bailed out. It was a quiet message. This currency exists because the old financial system had just failed spectacularly. No exchange existed. No up. No price chart. Just a small group of programmers emailing each other. For the first several months, Bitcoin had $0 value, because literally no market existed to trade it. You couldn't have bought $1,000 of Bitcoin in January, because there was nowhere to buy it at all. But by late 2009, that started to change, and this is where our story really begins. A small community on cryptography forums began treating Bitcoin like a strange, fascinating experiment worth a few dollars of effort. Early miners ran the software on ordinary home computers, earning thousands of coins for almost no cost. One of those early participants was about to set the first real price tag on Bitcoin. His name was New Liberty Standard, a pseudonymous member of the community running an informal exchange. In October 2009, he calculated Bitcoin's value based on the electricity cost of mining it. His formula, $1 equaled 1,309 Bitcoin. That means a single Bitcoin was worth roughly 0.00076 cents. It sounds absurd now, but at the time, this was a completely reasonable price for an unproven internet token. Almost nobody believed digital money backed by nothing but code could ever be worth real cash. Governments ignored it. Banks laughed at it. Most people had never even heard the word Bitcoin. But a tiny handful of programmers quietly bought in anyway, treating it like a curious side project. They weren't trying to get rich. They just wanted to see if peer-to-peer digital cash could actually work. None of them could have imagined what that first exchange rate would eventually mean. So let's do the math. If someone had invested $1,000 at that October 2009 rate, they would have received 1,309,030 Bitcoin. Yes, over 1 million Bitcoin, for the price of a used car down payment. At the time, this stash was worth exactly what they paid, $1,000. Nothing more. There was no way to know that number would eventually become one of the greatest returns ever recorded. Let's hold on to that number, 1.3 million Bitcoin, sitting quietly in a digital wallet. For the next several months, it was worth almost nothing, and most people would have simply forgotten about it. In fact, plenty of early holders lost their wallets, deleted their hard drives, or gave coins away as jokes. One of the most famous giveaways happened just 7 months later, and it's now legendary in Bitcoin history. It's called Bitcoin Pizza Day, and it shows just how worthless Bitcoin still felt in 2010. May 22, 2010. A programmer named Laszlo Hanyecz posts an offer on a Bitcoin forum. He offers 10,000 Bitcoin for 2 large pizzas, just to prove Bitcoin could buy something real. Someone in the UK agrees, orders him pizza, and sends him 10,000 coins in return. At the time, that 10,000 Bitcoin was worth about $41. A fair price for dinner. Today, those same coins would be worth hundreds of millions of dollars. It remains the most expensive pizza order in human history, and Bitcoin fans still celebrate it every year. It's the perfect snapshot of how little Bitcoin was trusted, even a full year after it launched. By July 2010, something changed. A new exchange called MTGOX opened its doors to traders. For the first time, Bitcoin had something resembling a real, functioning market with buyers and sellers. The price jumped to about 8 cents per coin, a massive leap from fractions of a penny. Our hypothetical 1.3 million Bitcoin stash was suddenly worth over $100,000. In less than a year, a $1,000 bet had grown 100 times over. And this was still just the very beginning of Bitcoin's wild journey through the decades. 2011. Bitcoin crosses $1 for the first time, then spikes to $32 by June. Our stash, from $100,000 to over $40 million, almost overnight. Then it crashes back down to $2, wiping out most of those gains in weeks. This is Bitcoin's first taste of extreme volatility, a pattern that would repeat again and again. 2013. Bitcoin smashes past $1,000 for the first time, driven by global media attention. Our original stash now theoretically holds a value of over $1.3 billion. Then comes the Mt. Gox collapse in 2014, and the price crashes hard once again. Bitcoin spends years rebuilding trust, climbing slowly through 2015 and 2016 as adoption quietly grows. Developers, businesses, and a few brave investors keep believing, even through the doubt and the crashes. By late 2017, Bitcoin mania hits mainstream news, and the price begins an explosive climb. Regular people start asking their coworkers, their cousins, their neighbors, "Should I buy some Bitcoin?" Our original $1,000 is about to hit a milestone nobody could have predicted. December 2017. Bitcoin rockets past $19,700, a jaw-dropping all-time high. Our 1.3 million Bitcoin stash is now worth roughly $25.8 billion. News networks run segments. Family dinners turn into Bitcoin debates. FOMO grips the entire internet. Then just weeks later, the bubble bursts, and Bitcoin crashes more than 80%. Many new investors panic sell at the bottom, learning a brutal lesson about crypto volatility. But long-term holders, including our hypothetical 2009 investor, simply hold on and wait. 2020 and 2021 bring a new wave. Institutions, corporations, and everyday investors flood into Bitcoin. In November 2021, Bitcoin sets a new all-time high near $69,000 per coin. Our original stash of 1.3 million Bitcoin is now worth roughly $90 billion. That's more than the GDP of many entire countries, from 1,000 original dollars. Once again, the market cools off, and Bitcoin spends 2022 sliding back down sharply. Crypto winter sets in, exchanges collapse, and skeptics declare Bitcoin finished. Again. But in January 2024 everything shifts. The US approves spot Bitcoin ETFs for the first time. Wall Street giants like BlackRock and Fidelity start buying Bitcoin directly for everyday retirement accounts. Suddenly, Bitcoin isn't just for tech nerds and traders. It's sitting inside pension funds. Through 2024 and into 2025, prices climb steadily as institutional demand keeps growing stronger. In October 2025, Bitcoin hits a staggering new all-time high above $128,000. Our original 1.3 million Bitcoin stash briefly touches a jaw-dropping $167 billion. That single number is larger than the market value of most companies on the entire stock exchange. From $1,000, in an asset almost nobody trusted, that's the power of a first-mover bet. Now let's come back to today, mid-2026, where the market looks a little different. Bitcoin has cooled from its October peak, currently trading around $62,000 per coin. It's still incredibly volatile, swinging thousands of dollars in a single trading day. So let's do the final calculation, using today's real, current Bitcoin price. 1.3 million Bitcoin multiplied by roughly $62,000 per coin equals approximately $81 billion. From a $1,000 bet. Let that sink in. $1,000 became $81 billion, without a single additional deposit. That's a return of roughly 8.1 million times the original investment amount. No stock, no real estate deal, no lottery ticket in history has ever done that. And remember, this all started with software nobody trusted, mined on an ordinary home computer. $81 billion could buy roughly 200 private jumbo jets outright, brand new. It could fund the entire annual budget of a mid-sized country, with billions left over. It would rank that single 2009 investor among the 10 richest people alive on Earth. All from a decision that, at the time, felt more like a hobby than an investment. That's the strange, uncomfortable magic of being early to something the world doesn't understand yet. But here's the catch nobody talks about, and it matters more than the big number. Almost nobody actually held their coins that long. Wallets got lost. People sold early. Fear won. The real lesson isn't buy Bitcoin. It's that patience, not timing, creates extraordinary outcomes. The investors who won weren't smarter. They simply forgot about their coins and never touched them. If this blew your mind, subscribe for more wild financial history, and tell me below. Would you have held?